All right, all you devils out there. Here we are, Friday the 21st. Sam with you here. Oh, it's a little after 1 o'clock for me here. I'm a little behind schedule here. I usually start these around noon. I just wanted to go through my all of my counts, long-term and short-term, see if this volatility, this sell-off that we just had was enough to have me rethinking either count structure or long-term bias, if you will. I looked long and hard, right? I remain committed to this as my primary account. Now, I got a lot of people disagree with me. I've got many members, some of my senseis, all expressing concern here based on that sell-off that we saw and some of the, I suppose you could consider much of the background fundamental information, at least short-term, bearish. With regards to the Elliott count of just purely objective analysis, I see nothing to change this is the primary count. And now, and we've talked about this a couple of times, right? There is an alternate count that would have this, going 3, 4 and completing here, so that we would be done rather than 3 putting in the 4, right? So I'm not to belabor this, but I think there's a 1, 2, and I say that right again. I've been over this last couple of weeks here, but just for in case we have any new subs, this impulse is so much cleaner than what would be required to make this, that if this has to be the 3, 4, 5 and we're done, implying that this is a completed impulse and we're going deeper for the 2. I mean, all you can do is just compare and look at the count and swing relationship and, look and feel, because both of those counts are equally valid, right? That's slight bummer, right? I mean, it's just you could say, well, there's the problem with Elliott Wave. Well, I don't know that there's no perfect trading method. I think this is the best way to organize the information, and we are going to run into situations like this where it could be counted multiple ways, right? It's not the first time that's happened. So you have to go with what, again, per the look and feel, wave relationships, as much technical analysis as you can bring to that analysis to make a decision. Because otherwise you're just back and forth, waffling back and forth, and you're just kind of at a whim to whatever the market is doing, right? Oh, big drop off. Well, it must be the 2. Well, slow down right now. Everybody gets concerned, right? Jesus, the media, right? The Bitcoin crashes. The bull is over. It's careful of feeding into that, right? The advantage of technical analysis is that you don't need to listen to any of that shit. You can just look at the chart. What do you read from the chart? Now, okay, right, fair enough. Reading a chart, there's art and science to that, right? And much as I'm describing here, like the look and the feel. Well, right, we could probably get down into nuances and wave relationships, but we've been over that a couple of times over the last several weeks as we've gone through this. Bottom line, I remain committed to the idea that we've got, coming off of the COVID low, we are incomplete. This 3 off of the 1, 2 is incomplete right now until I'm forced to change that, and this is going to come to, if it's coming down deeper. I mean, here's the 17 high, which would not invalidate this count. We could come that deep and still have a solid 4. I'm not anticipating that, but sure as hell it's possible. So I'm going to put this here as the 4, and I'll show you why I remain committed to that. I'm trading accordingly. And I think you should as well, but not based off of my count. What we do here is teach you how to do this yourself so that you don't need anyone's approval, right? It should be based on what you see. And if you're a student of Elliott Wave or a student of ours, how we integrate geometry, Elliott counts, fib relationships, algorithmic patterns. You don't need anyone to tell you if this is right. Ultimately, eventually, right? I mean, I make a point of, but before I do any analysis like this, I don't want to see anybody else's input because it might color my thinking. I want to just go off what I see. Now, granted, I've been doing this a long time, so perhaps that's my advantage to a new student. I completely understand that, right? So if you're watching this, right, you're looking for ideas, confirmation. there's a reason you're here watching, whether you're a member or you're a YouTube sub, is that you're still progressing as a technician. Ultimately, I've said, I think I've got this written all over our website. The goal here is for us as educators is for you to reach that point where you don't want anyone's input and you don't need anyone's input. That's where we're trying to get you to, right? Because often that will lead you to paralysis of analysis. Not that you should take a blind eye to what's going on across the space, but remember the foundation of technical analysis is that every known fundamental that can be known at this moment in time is reflected in that price. The buying and selling of Bitcoin at this price reflects all the known fundamentals. That's all we need to know, right? So this sell-off, whatever the reason, right? Buzz around crypto Twitter, you'll find multiple reasons for it. It doesn't matter. It's how do you organize this? Do you have a long-term bias? Can you make sense of this? If you're an Elliottician, can you complete a count here that stays consistent with rules and guidelines? Can you do that? Then pick a primary, have an alternate. Well, so here, we already know, you know what my alternate is. It would be that we've completed here, that this is a completed impulse and we're going to go deeper for the two, right? That's the alternate. There's nothing that's happened here yet in my mind to have me change from that as my primary, right? Now, let's go through that here because I'm kind of belaboring the point. But before we progress right here, as we go into the nuance of the trading pieces of it, this is events like this are where you have to make that distinction between your long-term Bitcoin holdings, things that are likely not on an exchange, that are in your wallet, and you're trading Bitcoin, right? So when I say I'm a buyer under 42 here, that's my trading Bitcoin. In my trading Bitcoin, I got stopped out. My long-term Bitcoin, I'm not worried about that, right? Because I don't think anything has happened here to change the trend long term. Now, if you need just a little bit, you don't want to take it from a technician. You want to take it from someone who's much more dialed into the fundamentals than I am, and is certainly one who's put his rather large wallet and his company's rather large wallet where his mouth is Michael Saylor. Now, I retweeted this on my Twitter feed. If you haven't watched this, watch it. Well, shit, if you're watching this, you're likely following him on Twitter. So maybe you've watched it, maybe you haven't. If you haven't gotten to it yet, watch it. Right? Because this is really the core message that he's conveying here. And that is that and I'm just literally quoting him here, the volatility is the price you pay for it to be 10x outperforming the S&P over a decade. Right? No free lunch. No free lunch. Right? You want these kind of returns. Note here, I should make a note here. I am in log scale. You want these kind of returns from 3,000 to 65,000. Well, you're going to have to put up with some volatility. If you can't take the volatility, you're in the wrong kitchen. And stops are part of the business of trading. You can't be just crushed because you got stopped out. Okay, stopped out. Now, as long as you didn't over lever and you didn't take more risks than your account can accommodate, a stop is just the course of doing business. Okay, I got stopped out. What's next? Where's the next opportunity? Again, turn it into a positive. Oh, okay, my money management is working effectively, right? I was stopped out just as my plan was. Either it's going up or I'm going to get stopped out. Okay, next trade. So certainly part of what exacerbated that sell-off was all the leveraged longs that got literally obliterated here. Now, who is that, right? Who's in late that's buying up here in the 60s with leverage, right? Who's that likely to be? Well, I mean, I'll let you draw your own conclusions, but I think fair to say that that's likely to be latecomers, inexperienced traders. Could be, right? Shit, I mean, you're just making you're doing a little deductive reasoning here, right? So as all the stimulus money and the Robin Hood buzz and all that craziness, we're going to get rich in crypto now. GameStop is over, or it's not doing what it used to do. So let's all plow into crypto and Bitcoin. All of that leverage here just utterly wiped out. So this is a cleansing, right? So Bitcoin just got a deep cleanse is what it got, right? So now can we build a base here? Can we reestablish, right? We don't quite have it yet. Clearly, right? Volatility still remains very high. But if we step back here, and again, I'm just on a daily chart in log scale. All right, so just if you brought that up and you didn't know what it was, just the chart by itself. Again, emphasis, log scale. It's going to look very different out of log scale. I remind you, we've got a range from 3,000 to 65,000. Yeah, I'm going to look at that in log scale. Now, again, take the fact that it's Bitcoin out of it. Any chart that I looked at, that I saw this, I can't think of any reason that I would come to a different conclusion. I don't care what it was. Google, Facebook, AMD, Ford, it doesn't matter, right? I mean, a chart's a chart. They all, the reason TA works is because humans react emotionally, right? So fear and greed is what Elliott Wave is all about, right? It's just fear and greed, fear and greed. Fear, greed, fear. Now, if we're going to drive higher, greed will be the motivator, right? It's human nature. It's these patterns that are predictable and they repeat because people do the same thing when emotion is involved, right? There's very few things, people maybe beg to differ with me, very few things more emotional than money. Right? So as we sit here, as all of that fear was overwhelming the market, oh my God, the sky is falling. Well, if you step back, take a bigger picture of it, right, is it really falling? Are we really falling here? Yeah, we've had a deep retracement, and that's an extreme bar. But have we blown the Elliott count? Have we blown the impulse? No. No, we can dispute and we can differ on how deep this is going to go, right? So one thought is it's done, right? And we've rebounded. Now it may well get another test. Just if you look at it from this distance right here, right? So let me just open this up a little bit. So if we come off of this and we go up and we get that, well, this is going to be the most drop dead simple correction perhaps we've seen since the COVID low, right? A, B, C. What I mean, right? Rudimentary Elliott, 5s and 3s. I can get, now it's a little ugly here, but I can get 5 up. All right, now I was a holdout on that as an ending diagonal, but that's what it ends up being. All right, so again, I'm not always right. Shit, I'd be the first to tell you, like every trader who's been in the business as long as I have, I'm wrong way more times than I'm right. Way more. The goal of trading is not to be right more than you're wrong. That's fallacy. The goal of trading is to be profitable. Right? You do not get this in your head. If you're new to trading, you do not and should not expect to be right more than you're wrong. Period. So how do we deal with that? Stop loss. If you didn't have stops on this, you got exactly what you deserved. If you were over levered after buying up here, that was your mistake, right? In the market, see, I don't want to pick on people. It's a pattern. If you're a buyer here with leverage, given where we were, and you over levered here, that was the mistake. The market is unbelievably consistent in punishing mistakes. Changed your money management plan. Probably a mistake. Moved your stop down. Almost always a mistake. Almost always. Didn't have a stop. Massive mistake. You got exactly what you deserved there. Right? The market's going to teach you that. I can try and teach it to you, but until you've experienced it enough times, I mean, ultimately, the market is your master, right? The market is what will teach you the lessons that you won't forget. Me, you watch my video, turn it off, or your next video, right? I mean, I'm passing information. The market will leave you scarred. And the reason I have conviction in my trading is because I've got so many scars. So I know what the market can do. I'm head to toe. I'm scarred from making mistakes in the market. Right? Again, all I try and do, pretty much the entire purpose of Trade Devils, is trying to pass along, to shorten the learning curve so that you don't have to learn it scar by scar as I did. You can listen to me, or you can just say, well, fuck that. Right? I'm going to learn it. I'm going to learn it like he did. Okay. It's a long, painful road, but you'll get there eventually. All right, let's move on. Okay, so as we look at this, here, as I babble on, right? Is that a 3? Is that a 3 at this point in time? As long as that pivot holds, as I said, if we come out of here, that's going to be like, holy shit, that's Elliott 101. Like a 5-year-old could have picked that. Hey, it's 5's up, 3's down. If we go up here, what was that? All right, now granted, right, we're out on a daily here. We're going to dig into that a little bit. But if that's what comes off of that, will you be back here kicking yourself because you didn't have the let me say the conviction in your technical analysis to take the trade? Is that what'll do it? Right? You were scared of it. I would tell you the more fearful you are at the moment of entry, most likely the better the trade. It's the one where you go, oh shit, this fucking thing's going to the moon. That's the one you'll get stopped out on. There should always be, fear is the wrong word, a healthy respect for how quickly the market takes. Oh, it's so easy when it's going up. So easy. Oh God, everyone's a genius. When it's going down, that's what leaves the scars. All right, let's look here now. So you say, okay, all right, I got it. Okay, there's a 3. Well, now of course we don't know that that's going to be the low, right? We can't say that until until you're going to have to break the high, right? Until you can really confirm it and say, okay, that's done. Now there will be tells along the way. And that's essentially what we're doing here, is just looking for clues. That's all TAs is clues of confluence. Can I find enough confluence to give me conviction to take that trade? Because I'm inherently a counter trend trader, right? So in terms of short term, I'm dying to buy that for a number of reasons. One, everybody thinks it's going hard lower, right? As soon as I hear that, I'm itching to buy it. Media, very bearish. Crypto Twitter, well, hardcore hodlers, unfazed by this. Newcomers to crypto, shit in their pants. Holy shit, I thought this only went up. I thought I was going to be a millionaire by the end of the year. Welcome to the party, gang. All right, let's look here. Let me go. So what I did here was, I wanted you to get a big picture here. Just stay grounded in where we are in context. Now, before I get off of this here, because we're going to go look at I think I'm going all the way down to a 5-minute. As we sit here, right? So there's a couple of things, right? So just a little Elliott, right? So, and we had talked about this. Now, it was a big fucking range, right? So, I mean, it's a 10K range. But if you were going to come lower, prior 3-4, and this consolidation was a pretty obvious spot to consider that, well, if we're going to break here, right? So that's right where we were. There's 42 and change. So either it was going to hold and pop, and we would have had our little 3 right there, or it was going to break, and we were going to head lower, right? And the obvious target was, well, shit, right? Let's draw up a set of median lines. If it's going to break, that would be a reasonable target. Well, we got to and through, right? Now, you can expect extremes on moves like that. But let's reconstruct this here. Before I go to the short time, how am I doing? 18 minutes. Okay, I'm trying to get this done in 30. Okay, let's just reconstruct here. So on the premise right here that this is a 4, well, what's the first thing you do, right? Assuming the count is here, well, I think I did this last week, right? I've done this for several weeks. And I've just wicked off the low here. The first thing I'm going to do is pull up my fibs. Now let me just make sure that I'm spot on that. I've got the low wicked off here. Right, so here's my proposed 2 at the largest degree, right? It's narrow 2, there it is. All right, so what we talked about was the prior 3-4 here, and I've just wicked off the extreme low here to give it maximum range here. So this area was the likely consolidation point. Well, if we're trading this, and again, it would not matter what it was. If I'm holding to the conviction here that it's 1, 2, and then I get a clean impulse internally, if I'm looking for the 4, where I mean, literally, you could open up Elliott 101, right? Well, maybe not 101. All right, but certainly you'd find this in the Elliott Wave principle. All right, so this would be a logical place to anticipate the retrace. So we can come to this and say, okay, well, where's the highest probability zone for my wave 4? Between the 23 and the 38. All right, so I'm starting to build confluence here between 3, 4. Proposed 2 to the proposed 3, 38 within a few ticks. I mean, that alone right there is enough to have you start going, All right, I've got a candidate for a hard pivot. I've got just that. It's a candidate. Now, it's a little bit extreme here. Again, we're going to look at it short term. But let's just a quick review on a few things here, because this has, let me take this up, has had interesting influence here. So clearly it's another algorithm that's involved here. And we've looked at this before, right? You guys know I call it the wolf wrench here. And we looked at the range expansion is all we're doing here. So we're taking the swing low, swing high to the 1. This is not relevant. I'm only looking for the length of this swing, and I'm projecting up 100%. There's 100% within a couple of ticks. Now, I did the same thing here because I wanted to see this range here. Did I have confluence here? So again, same thing. Now I'm just taking that same range. Now I got pretty tight confluence there. Now again, this is not relative, this 50 here. I use that kind of as a mile marker here for that range. Here's halfway in that range. So this range expansion seems to be nailing the market pretty well. Now, if I pull it back here, now if I take that and I'm going to put, here I'm going to use this one. I'm going to put the 50s on it. Wrong one. Let's get my wolf 50s on it. Well, here's the 50% here. So do you see what I just did? Here's the range from this pivot here to the 100. Well, here's 50%. Now, if I use the lower pivot here, I mean, we're within ticks of it. So I've got a nice little confluence spot right down here. Now, it's the pivot here, right? So we've come right down to the low end of the range. Now, we've had a reaction, but nothing says that must be the low, right? We certainly could we could break it, we could go lower, but I've got a candidate here based on objective analysis, regardless of whatever you read on crypto Twitter. What do you see? What do you see? This is what I see. I see clear ranges. I see that we've got this range here that expanded up. Well, shit, I'm in log scale. I can't do it in log. But this range here, well, here's the 100, right? Here, I mean, within ticks. Back to the low end of the range. If this range, here's the 100, 200, 300. If we're going up here, this kind of range expansion will be something to be looking for. Well, you can see why I've got these up here. Now let's add to that. What if we take our typical length wave relationship? I'm going to go up to my wave 1 pivot here. I'm going to project from that, get it right on that low, if that's going to hold as my low. Well, look at the nice bit of confluence I get right here. All right, so this would be 300% of that range of this range. Here's 100, 200, 300, right in line with that 1618. All right, so it gives me a hard target up here. If I'm going to get that, right, which I would propose is not unreasonable in one of the great bull markets of our time, 1, 2, if that's going to be the 3, so let's put the whole thing together here. All right, so let's go off of the 1 from the 2. All right, now you want to get even more bullish, we could fatten this up. Now I got the 2618. So I'm going from the interior, the 1618. Up to the 2618 off of the 1-2, looking for this 3 to get the 2618 off of the 1-2 COVID low. Now, I know that gets mighty crowded, right? It's always easier when it's yours. But so I'm going to take these off just to, let's do this. break that down since we've got these noted here. So here I got a nice fat target up there. Now in log scale, that's a big target, right? Just as this was a big target down here. Or we see that's 100, we'll round it. We'll call it 150K. Does that seem possible for the big three? I mean, I don't. There's nothing that I see here that tells me that path has been interrupted. Yeah, we had some volatility. We had a deep cleanse, a full cleansing of everything that needed to be cleansed out there. Now let's look down below. All right, look at the volume here. Let's bring this over here so we can kind of put this in context. Let's just focus on the volume extremes. What happened the last time we had a sell-off with this kind of volume extreme and the RSI got this deep? Well, that was the COVID low. Right now, here's our next sell-off. Look at the RSI. Right. So the last time on the daily in log scale that the RSI got this deep was the COVID low. Where are we now? How about the volume, right? Not as much here. That's a shitload of volume. Because right, the stops got hit, the levers got, the levered players start getting liquidated, boom, 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 boom. Now, it remains to be seen, right? So there's, maybe you guys have seen, are you guys familiar with whale map? It's just kind of tracking big whales here. So I'm just kind of playing with this. I follow them on Twitter. Let me see if I bring this over here. Big whales. Right, so there's a lot of here. I can't even get to the full whales here. I don't have that upgrade, but 1 to 10K, we can see there's a lot of whale buying here. What's happening here is they're buying and then they're pulling it off the exchanges. So what you have here is a potential floor based on all of that size and what whales are doing. So when they're I'm assuming you guys know this. When they're adding to the exchanges, they're teed up to sell it. When they're taking it off the exchanges, they're putting it away, right? They're going to hold it, put it in whatever wallet they're using, and it's gone, right? It's no longer threatening. There's a few things here that are worth. Oh shit! If you follow me on Twitter, I'm not going to retweet something if I don't strongly recommend that you give it a read. That said, there's a lot of potential confluence here, a little bit of fundamental, a little bit of technical. Well, certainly what we're looking at here is technical, to suggest that I have a good candidate here for a low. So putting all that together here and the premise that I stick to that this is an incompleted impulse here right now. Again, as I just told you, I'm wrong all the time. So if this is going to come down, it sure looks like if this is going to come down deeper, is that going to be 1, 2, 3, 4, 5? Well, that would imply a wave, which would suggest much deeper. I think that's very low probability. Listen, man, anything's possible. Anything is possible. But that, I think, highly unlikely. Well, shit. I mean, talk is cheap, right? I will continue to be a buyer if we're falling. I will be buying the whole way down because I think if you have a longer term time horizon, and you're thinking about Bitcoin over the next 3 to 5 years, all that happened here is we had a fire sale. Right? They're going to keep putting it on sale? No. So what else could happen? This could be a W. We could have an X. We could have a Y, right? If it's going to hold as a 3 and not turn into a 5, this could be a W, go X and Y. We could have more complexity. Now, the reason I don't think that's as likely is because we'd be talking about a massive 4 relative to this tiny little baby 2. Possible? Of course, right? Anything's possible. Probable? Highly unlikely. Highly unlikely. Why? Because these patterns repeat. That would be highly unusual. We want to stick with patterns that repeat with high probability, not the wild card. I think 100 is, all of this is just, in my view, just a matter of time, not a matter of if. It's just a matter of when. So maintain that distinction in your holdings between your long-term capital, fire sale. Trading capital, fuck, I got stopped out. All right, so trading capital, where am I going back in? All right, with all that said, oh shit, I got to 30. Damn it. All right, let me. I was trying to do it in less. All right, let's go over to the micro. All right, there's plenty to dig in here. All right, let's look at this. Oh, here, let's take that one off for the time being. All right, now, was this? I had a member ask me about this earlier in the week. Members, right? James M. hitting me up. You know, it's a tricky thing, right? So, the question was, when we go down to lower time frames, do we want to be in log? Right now here, if I sit here, we've got a low, this is a $30,000 range. The low here, let's call it 30, and the high, what's more than that, right? 65. This is a $35,000 range. Now, if we were looking at Bitcoin and we'd gone from 0 to 35,000, would we be in log scale? From 0 to 65,000? Or pardon me, 0 to 35,000? Yeah, I think we would. We were in log scale when it was from 0 to 20,000. But when we compress the data down here and we're not looking at so much range, it's not unreasonable to come out of log and look here, because the point of his question was, are algos using log scale? Well, I can't answer that with certainty. I can only answer that from looking at it. I see algo hits at golden zones and 50s in log scale. I also see them, well, certainly more often in arithmetic, but I don't ignore it in log scale. So I can only speak from what I've seen, right? I haven't had a conversation with a coder who writes this for institutions, and he's telling me, oh yeah, we do it in log scale too. No, I haven't had that conversation. So shit, I don't think Halsey, who introduced this to me, I don't think he's had that conversation. None of us have had that conversation because they don't reveal that information. So all we can do is look, right? I mean, that's how Halsey came up with it, right? Any of you saw that presentation I did with Ninja Trader, where I went through all of that, right? How a little deductive reasoning, how he came to it. But the point, it really doesn't matter, right? We don't know. So all we can do is look at it and say, well, shit, is it popping at 50s and golden zones? Well, if it is, okay, let's keep that in the mix. Now, right here, I'm going to go out of log scale, just to make it for a few examples. We'll look at it in and out. All right, but let's just focus here. Now, granted, it's still 30 to 65, but I'm going to come out of log scale nonetheless. So first, this was clearly, right? We talked about this, right? Remember that? Don't be a breakout trader, right? I mean, I said it, a little tongue in cheek, right? Like this is what retail does. Right, right? Part of what was causing this was the breakout traders here, right? We're going, right? We looked at this. Let me get the appropriate one on here. Put M2 on here. It ends up being a 707, right? Square root of 50. Interesting, right? So it got just right. So I call this the platinum zone. So we've got a 618 to the 707. Interesting that we pivot there to the tick. So certainly a valid B. Right, and this is often where I'll suggest using a stop. So if you were looking at if you were short off of the golden zone right here, that's why I'll often suggest the 707. Right, so you're giving it a little cushion beyond. You're not as far to the 786 or the 764. You're kind of in between those two. So you're giving a little bit of room for a bit of a stop run. Well, to the tick. All right, so good. So if you were in that short, right, you should still be short. Or you would likely have caught that entire move. All right, so I digress. Here's the breakout. Here's the bait, right? It's going to go, it's going to go, it's going to go. That's what it is, right? It literally, I'm saying that a little tongue-in-cheek, but that's exactly what that is. That's breakout bait. Oh, here we go, we're going to go. You better get it. FOMO, better get it. Jump on Robinhood, let's buy it. Nope. That's why you don't do that. Okay, coming down, right? So I can get a diag into this A. 1, 2, 3, 4. A little skinny at the end, but I can get it done, right? Slight overlap here on the 4. Okay, so I got 5 into an A, B, C into a B. So I got a qualified B right at the 707. Okay, all good. Now, there's no way to count this without extension in the 5th, right? And that includes the 5th of the 5th. So yeah, I can get 1, 2, A, B, C into the 4, 1, 2, 3, 4, extension in the 5th. 1, 2, 3, 4, extension in the 5th. Even here, 1, 2, 3, 4, extension in the 5th, right? So when it waterfalls like this, at some point, you can't dig anything further out of there. Now, granted, I'm still on a 2-hour here, but it really doesn't matter. right? I've got a candidate, nothing more than a candidate for a potential pivot. Well, here you see the 3-4, right? That framing that we just looked at. Now I've come down here and I've just put the 25 on this, right? So I've got a sliding parallel on the median lines. So interesting that now these are I pop the magnet and get these tick perfect, right? These are on the tick. Look what we've just done here. Well, look how the median line is participating in this, right? So here, all right, so we get a corner, right? Not a golden. We get a corner pocket because it's not out of the golden zone, 80%. Now we come back here. Now here's median line trading principle number 3. If we're going to decide here at the median line, we're going back, we're going down, we're going back up. What are we doing here? We're going to hover around the median line and it ultimately pulls down. We get the throw over here. We go out to the 25. That's the 125 beyond this. Right. So as we hover, what do we do? Median line, median line, median line. You think that's an important line? I mean, you don't. Just look at it. Does that look like that's having some influence on the market? So we look here and go, well, shit, man, something's happening there. Well, what's happening at that line? All right, well, that was the support, right? This was the price action, structural support, prior resistance, right? Now, you could call this potentially a test, right? Front run off of it, maybe. Here, this is the reason for the buy here, right? This is why I was a buyer here. I'm encouraging others to look there. But you sure as hell put a stop on it. So here was the buy, here was the stop. You didn't have to risk you didn't have to risk a whole lot there, right? So the premise was we had a potential here that this was a 1 and that we had gone A, B, C, we're coming down, or pardon me, we'd gone A, 3 into the B, right, down for the C. So now we were looking at this in log scale, and you see we had a little pivot here. It held golden zone, ultimately gave way. So, but again, I'll take it out of log scale just to stay consistent. It's threatened, break. All right, so that whole thing blows up. It's even here, right, if you were doing it this way, just dominant to dominant, right? So dominant to dominant, which I think is how we looked at it last week. Look at the 2 wicks into the golden zone. Well, here's the first reaction. 2 wicks into the golden zone looks like, oh, maybe it's going to hold. So there was the reason to be a buyer down here, right? As we came down and pivoted to, that's within ticks, right? Within a couple of ticks of the pivot here in the golden zone pops out. Oh, hey, looks like we might get something, which is why, right? You guys have heard me do this a gazillion times. That if you want to take that trade, right, the safest thing to do is wait for the little retrace. That way the stop is so much smaller. So even if you were a buyer here, right, if you went for it, right, which, no risk, no reward. If you went for it here and you on the retrace, now maybe you didn't get enough here to start, but if you bought it just on the idea, oh, median line, okay, let's buy off the median line. Maybe we're going up here, we're going to get 5 out of that. Well, you shouldn't have been hurt too badly here, unless you were just, really, really, really generous with your stop, or you bought such little size that you can afford to take that drawdown. I mean, that's from 42 to 28. That's a pretty good hit, right? So, I mean, if you're only, well, it's all relative to your risk tolerance, right, and what's appropriate for your account. So taking that was not. Taking the trade, not a mistake, right? You can't think of it, oh, I got stopped out, so that's a mistake. That's not the way to think of it. Not having a stop's a mistake. Taking too much risk, that's a mistake. Taking the trade, that's just the business of trading. We're at a technical confluence point. I'm within ticks of structure. I'm in the golden zone. I take that trade 100 out of 100 times. I'd encourage you to consider doing the same, right? I mean, oh my God, I mean, I can't even. I couldn't even come up with a number. 10,000 times I've shown that as being a profitable place to enter. So on 10,001, you're going, no, I'm not taking that one. Oh, I knew that was going to go down, right? Don't get caught in that. There has to be consistency in your technical approach. So if you were a buyer there, good for you. If you got stopped out, yeah, well, join the party. Everybody got stopped out there. And if you're still long, well, let's hope that you have the risk tolerance to accommodate the account size. Okay, let's just continue to work here. Okay, so with that now established, right, is the reason. Now look what we come right back here. We can't get through, right? So all it is prior resistance becoming support, now turning back to resistance. We can't get through because that's the structure. I mean, it's not rocket science. So why can't we get through? Because the people that shorted here, right, are defending here. Now, what else, right? When it's been hit that many times, you're going to anticipate likely there's an algorithm involved. So let's go down to, oh, shit, here we'll do a 15-minute. Right, that many times, that's, okay, right, algo or not, you could look at that and say, okay, structure, median line. But the fact that we're struggling here, the first thing that I'm going to do is say, well, there's an algorithm there somewhere. Well, if we look here, all right, so I started here. I said, okay, all right, there's gold. Well, here, let me get the 707 so you can see it a little better. Oh, let's take that off so you can just see these golden zones. Okay. All right, here's our swing, here's our low, golden zone within ticks. All right, I'm on a 15-minute. Where's the 2? Golden zone. Are you taking that trade? Well, I don't take those. All right, you're either consistent or you're not, or you're in trouble. Down for the 3, 4. All right, we come down. So I know that they use this pivot. So I'm going to come to the next one. We got a double bottom down here. Since they use this one, I'm going to look here. All right, what do I get here? Right, this is how this algorithm works, right? So they'll just get, that's why they don't care if they get stopped out, because they'll get these series where they'll get 4, 5, 6 in a row, or 2, 3, 4 in a row, right? That compensates them so well for when they're wrong. So 1, 2, they got 1. All right, here's 50 to the tick. Here's the first target. They got 2, right? This gets second, third. I mean, wait, right. You don't know. There's no way for us to know if they stayed or how long they stayed or if they rode it, they had a runner. We're never going to know. What I can see is there's a reaction here at the target. So I know they use these. So you start looking. Now I look here from this 4 to this. I can just look at that distance, say that's too deep. So I'm going to come here now to the absolute low. So you would be here, right? You would say, oh, they use that. Well, here we're breaking. Right, so I'm going to go back 1, right? You always go back 1, say, oh, did they use that? Because remember, the algorithm doesn't see the wave structure. It doesn't care, right? Like all the algorithm is not seeing this. Oh, I got a 3-wave structure. All the algorithm sees is pivot to pivot, right? I got a swing, I got a pivot, golden zone, median line. Right, now we're going down. So you'd be looking here saying, okay, well, I know in addition to all the structural resistance, prior support, now the resistance, I got an algo there fighting me as well. And I got a set of median lines, likely with an algorithm tied to it. That's a thick wall we got to get through, right? So this count is vulnerable to an additional push. Well, look here, right? So you can just look at it. There's an algorithm here with a target down here, which would break this low. Well, now we'd be rethinking this. Well, okay, but just because I've got an algorithm participating here doesn't mean that it must come down here, because what's on the other side, right? Always, never forget this, always an algo on the other side. After we make that pivot, if I get these right on it, what's the first thing we do? Very first thing we do. First drop. Boom, 1, 2, 3, golden zone. So what are we actually doing now? Right, we are just stuck in a fib fight as the algo sits here at the 50. Now, it's unusual to go. It typically won't do this. Typically stop at the 50 and then come to the golden zone. Here we went golden zone. Now we're stopping at the 50. Now, is that going to hold? Well, no way to know until we resolve here. Now, what I will say is this isn't a very good looking start to a 5. But, down here on the 15-minute, I mean, sure, of course, right? I'd love to see a nice, clean 5 come out of this, but it doesn't look like I'm going to get that. What's our order of priority, right? If you're a Trade Devils student, what's our priority? Number 1, what did this algorithm do last? Number 2, where's the geometry? Right? Does that assist in my decision making? Number 3, is there an Elliott count that makes sense that I can use to organize the information? Right, to help me get in line with what's happening, either at a larger degree or within the confines of these swings. Well, I don't have a great Elliott count here. Maybe this ends up as some sort of ugly 1, 2, right? Maybe. Right now, it just looks like it's consolidation. I'm just going sideways between two golden zones. Who wins that fight? Well, I wouldn't be surprised if we came down here. right? Put us at 25. Am I rooting for that? Of course not. I want to see signs of strength here, but I'm watching this. I want to see us get to the other side of this, right? I want this. I want to see that get tested because that obviously has been the critical level. Well, it's 41.98. Let's call it 42 to round it out. I want to see it get above 42 and then give it a little retest, which would be shocking if it didn't do. If we come out of this box, now, of course, right, you might just as well think, I want to see it, right? If you're a bear, I want to see it come back and test that. All right? I'm not saying right here, looking at that, I can finish down here. I can finish the 5 down here, but that's not a great looking 1-2, right? We can all agree. If you're an Elliottician, right, that's an ugly start to it. So we certainly possible that we're going to come down here and just, again, algo doesn't care about the Elliott count. We come down here and we finish this. Well, we'd have to reorient the count because as it sits right now, 1, 2, 3, 4. You know, I mean, you'd end up putting the 3 down here. The 4 would go over here somewhere. Or maybe this is a B, C, D. Maybe we got a triangle here. Maybe we get a triangle here. And we're going down. We're going to break this low, and the 5 will be down here. Certainly possible, right? It's not how I'm playing it at the moment. Well, I mean, I've when this was down so hard. I mean, when I turned my machine and saw that, I literally couldn't buy it fast enough. Now, I didn't buy huge size, but I wanted a piece of it. So, I mean, I've got to stop under this low. You know, again, that's the obvious place for it. If they come down, if we get close to it, they're going to go get them. But it's just that for this size that I bought, that I'm comfortable with that. I would have liked to have seen a better reaction. I would like to have seen this break on this push, right? Ideally, we'd had a good 1-2. Up we go for the 3. Right now, I'm not sitting here in fear, but I'd like to see this hold. Obviously, we're too narrow here. So if we were to come back down here and test this structure down here at 34-ish, I'd be quick to get a set of median lines on it, right? If we did something like this. Now let me get that. Oh fuck! Here, let me get this to. Original, if I can get it. Original, there we go. So coming up here at that target, if we were to come down here, I don't hate it here. You just have less room here. I'd like it a little better if we were to come down here again, where this is going to be some sort of a shit. We could do it right here, right? I mean, it's Friday, right? So we go into the weekend. You know, it's you're in the Wild West, right? There's no telling what happens on the weekend. It's always a bit of a wild card, right? So the liquidity's less, right? You know, often you'll see extremes on weekends. Although this, right, was middle of the week. We don't have it yet, right? So let's wait and see if we get a reaction down here. But as it sits right now, my view would be holding pattern, unless you bought some of this dip as I did, just because of the idea that essentially, right, there's just a fire sale. If you bought some of that, I mean, of course, right? Money management is important here. I don't know that I'd be putting on a fresh long here because of that. I want to see if we're going to come down here and test this. I want to see what happens there. How do we respond down here? It's tough to get any kind of a count on this. There really isn't a clear count on this. So until we get a little more reveal from the market, I'm not even trying to put a count on it. I'm sticking with my original count here. I don't know what's coming out of this. We may go down, certainly. Well, you got 2 algos here, right? So one with a target up here. If we get up here and go after this, well, we can just kind of look. All right, we're going to go up and get that. Well, we'd run into a little structure there, but I'd start to feel a little bit better here. We get over that. Well, here's the critical structure, right? As we come back, right? We got to get over this pivot. We got to get back. This is just what I was talking about, right? So we got to get over this pivot here, right? And for bulls to reclaim, we got to get up here, right? We got to get up and we got to test, right? We got to test this again, right? Is there more selling going to come in, or are we out of the woods? I think no trade is the best way to approach this here until we get more reveal. Now, if we come down here, let's see, you got to think about that and say, okay, well, if this comes down yet again and we take out this low, well, now we got to rethink what's actually happening here. Is it 1, 2, 3, 4, 5? I still think not. I think you'd still be pushing the C. The one other thing that was in here that, here, I should be wrapping up. God damn it, this is too long. Sorry. I always think I'm going to make it in 30 minutes, but I never actually do. Okay, so here, length of the 1 from the pivots here. Get it right on that. Oh, it's close. I mean, we're within ticks here. So I'm right in the 165, 178 window, right? I'm right there, right? You say, well, oh, hey, I thought that's a good candidate for a 3. Well, this could be 1, 2, 3, given that. Could be. 1, 2, all right, we'll turn this into a 3. There's the 4, we're coming down for a 5. It doesn't quite, well, here, let's play that. So let's say that is, right, so we take that off. Let's take this off. All right, if this was going to be, so, oh shit, you'd have to do it. So you don't get a good, oh, the 1, 2 is pretty solid, right? So Jesus, I don't even think you can get it. Because you would lose the 2, right? So this is a good 1, 2, 3, ABC into the 4. You'd lose a good 2, because where are you going to finish the 1? If this is the B, you'd have to go 1, 2. It doesn't play, right? It's not. Wouldn't be far enough. So again, just kind of look through this, right? Do this on your own chart, right? Members for sure do that. Well, shit, if you're on YouTube as well, you get me to a countdown here where this is 1. Pardon me. This is 1, 2, 3, and that's 4. I don't think you can get there, right? Because so if this isn't your 1, 2 of the entire move, this has to be 1, 2 of the 1, 3. Where's your? Is this your where you're completing your 5? You're gonna put your 5 here, and that's your 2. Well, it wouldn't be long enough. Well, fuck. Okay, right. This reminder, right? 3 doesn't have to be the longest, just can't be the shortest. If this is your 1 here, and that's your 2. Well, we're not to the 100 yet. So you'd have to be looking at this saying, okay, I got a tiny 2, right? Well, shit, right? We look at Bitcoin on the daily, right? It can throw out a tiny 2. So down we go for the 3. Well, it's not far enough to be my 3, and okay, maybe you could dig out an extension into that. 1, 2, 3, 4 extension in the 5. You could, right? Just as exactly as I have it. This is the 4. If we're going to finish here as the 3, well, 3 now shorter than 1, so you'd have to be paying attention to the length of 3 relative to 5 if we're going to take this out as a new low. So that would be an invalidation point. Right now, as it sits here, I got a golden zone down here. I got a golden zone here. I got a 168.175 here. Until I'm forced to change this count, I stay. I hold. Not hodl. I hold to this count. Right? Not to belabor the point here, but I think we are right now. The biggest problem with this count is that we don't have a good impulse coming off of it. Well, we don't even have a 5 coming off of it. Really, I mean, you almost can't get. There is no clear count here. So what you would say for sure, right, is that this is not impulsive, right? Until we get some more here, this is not an impulsive move off of this low. That does not demand that this low be broken, but this isn't the impulsive reaction that you'd look for. So market needs to reveal a bit. I'd be on hold here. Let's see what happens over the weekend. All right, and I will certainly be watching it over the weekend, right? Because you just never know. But I would not, I wouldn't be worried about, I tweeted this morning here. Last time, I wouldn't be worried about China banning Bitcoin, right? This is a great tweet from, if you guys don't follow, you should, documenting Bitcoin. This is the last time China banned Bitcoin. All right, just a reminder, right? FUD, careful, right? FUD, fear of missing out, FOMO, all of it is specifically, right? Just the definition of it is to get you to make an emotional decision at the wrong time. When do we want to buy? When everybody's selling. When do we want to sell? When everybody's buying, right? It was just, or what? Buffett say, you buy when there's blood in the streets, right? So this was a bloody, bloody moment in time in Bitcoin's history. Bloody, which is why when I popped my chart, I literally couldn't buy it. I couldn't get to the exchange fast enough to buy it. I've got to stop on it. Okay, guys. I think that, holy fuck. I did not mean to go that long. Sorry, guys. All right. Well, there you go. It needed a lot. So hopefully, if you're still listening, I appreciate you bearing with me. I hope you got something out of that. Do your own analysis. If I'm counseling and coaching you a little bit, good, right? Maybe I can help you with based on experience, but your own count should be clear to you. Right? That's the only way you get any conviction to take a trade. It should be clear to you, not to me. All right, guys, have a great weekend. I'm back on Monday. Again, we do have live streams coming. That'll just be something we're offering up to YouTube subs, get a little more interactive. It will not be in replacement of pre-recorded videos, which some people much prefer. I think I prefer them. But nonetheless, we had a lot of people asking about it. So that is coming. Oh, I think it's going to be next week, I think. So stay tuned for that. As always, you can get more. You can join us for free over on our website, tradedevils.com. All those links are below. All right, lots of options for you. You guys have a great weekend. Catch you on Monday. Members, I'll be back on Monday with Look at Your Alts. Okay, until then, you guys have a good one. Bye.